All right, continuation slide. Why you should do VA loans. So, 100% finance is pretty much a straightforward conversation, right? No down payment required for all military and veterans. So regardless of your funding fee scenario, regardless of your schedule of disability, regardless of all that stuff going on, as long as you qualify for a VA loan, you're 100% financing in 99.9% of the scenarios, right? No monthly mortgage insurance. So, unlike FHA, unlike USDA, and unlike conventional, those three all have some type of mortgage insurance included in the monthly conversation, where VA does not. VA does not have a monthly mortgage insurance conversation. Now, they do have a funding fee for non service connected veterans, but that does not equate to a monthly mortgage amount, right? No county lending limit for first use. Now, you will be encumbered by the county lending limit on your subsequent uses, but on your first use, you can qualify for a $2 million property, and the lender goes that high on VA loans, you can do that loan. And it's not considered technically a jumbo. A jumbo, we'll get into the nuances. We do master classes in conventional and other programs, but the lending limit for VA loans was removed years ago. So you have been able to do 750, 800,000, $1.5 million VA loans without the burden of considering it to be jumbo and having to alternate pricing. VA IRRRLs, that is the interest reduction rate loan program or cash out program for the VA, is fast and easy. Sometimes we can do no document, no appraisal IRRRLs, right, on rate and term refinances. So there's a lot of options to do a real quick refinance in the future for a veteran if the rate and term is to slide in their favor. So keep that in mind. High-end DTI with comp factors. So you can go above and beyond your 57% DTI that FHA caps you at. You can go above and beyond 60. Sometimes you can go above and beyond 65. It really depends on the lender and their overlay for what they consider to be eligible for their lending criteria, right? Every lender is going to be different. The VA does not set parameters for max qualification. They set parameters for the offsetting of those qualifications with compensating factors, right? Only certain compensating factors are going to apply. We'll get into the nuance of that when you're talking with Andrew and myself about the VA loan, so don't worry about that piece. Finally, something that's coming up here more recently is assumability. VA and FHA loans can be assumed pretty effortlessly as long as the person assuming them can qualify. Now, you don't get paid on that, right? The loan stays with the current servicer. It just transfers ownership. So you're not going to get paid on that piece as a RIMLO. But if you're doing a buy-sell transaction as a realtor, there you go, right? And as we've talked about time and time again, you don't have to use all the ancillaries that you have here at 69 Loans. So if you have somebody that comes to you with an assumable loan and they have a buyer that wants to assume that loan, we're not going to cry over spilt milk here. We're going to let you go ahead and handle that because it's the right thing to do. 1, for the veteran, 2, for yourself, but 3, ultimately, that's a program accessibility. So we're not going to deny that. But again, why you should do a VA loan: 100% financing, no monthly MI, no county lending limit on first use. VA IRRRLs are really fast and easy, and that's the refinance loan. High-end DTI with comp factors and assumable loan, right? Too easy. We'll see you on the next slide.